Okay. Hello, everyone. How are you? Welcome to a very fun packed Tuesday, and I'm live teaching you guys about something that a lot of you guys commented and said you want to understand and learn more about REITs. So today's episode is going to focus on REITs. Now, firstly, I have not made a presentation for this. I have made a beautiful document which is concised of a lot of information about REITs, which I'm going to share with you obviously for free after this. Now, the main agenda of understanding REITs, first of all, this is an episode that is being given by you guys because a lot of people recommended or requested that I do an episode on REITs. So we're going to talk about that. Now, there are a few fundamental things we need to understand about REITs. What we're going to discuss is what are REITs, how are they structured, what are the listed companies that are in the REIT space, how do you invest in this and how can you take advantage of this, what are the tax laws on REITs or the income from REITs, what are the tax laws that you can get. So we're going to cover all of that today. Okay, so I hope you guys have a little bit of time. I'm not going to take too much time. I'm not going to bore you guys. So let's begin as soon as possible. And first we'll just check what's happening with the market right now. Very good. Now, this is the document, but I'll come to this. Let's look at what's happening in the market right now. What a beautiful market today. Guys, market is up by 1,000 points. It has breached the 1,000 barrier. Market's up by 1,000 points. Nifty is up by 300 points and Nifty Bank. So fingers crossed, there's another 26 minutes left in the market. So hopefully it keeps going up and it doesn't go down. So fingers crossed on that as well. And if you look at the market, what are the most active people right now, or the top gainers are basically Hindalco, ICICI, Axis, Tata Steel and Tata Motors. They've all gone up by around 3 to 4%. So this is great. So we finally got a thumbs up from the market. Thank God. Omicron problems have slightly gone away. Now, let's go back to REITs. Now, we need to understand first, guys, what are REITs and how do they function? Now, I want to understand from you guys, how many of you all understand real estate investing? So basically, usually a lot of financial planning guys say that approximately 10% of your portfolio or 15% of your portfolio should be into real estate. Now, the traditional sense of real estate is that, okay, I go find a plot, I buy this piece of land, then I go register this piece of land, pay a percentage amount for registration, pay a percentage amount for stamp duty, and then finally I have this piece of land. Now, hopefully I barricade this piece of land or else someone will come and encroach on it, or I build a house on this and this is my house, correct? Now, this is the traditional real estate investment and I wait for a long period of time. Slowly this land appreciates and tomorrow when I sell it, it is great, I get a lot of money. Or the second thing what people do is they go buy an apartment and then put that apartment for rent, which gives them housing income or rental income, and that is your passive income source. But again, all of this requires a lot of money, right? If you want to buy an apartment, maybe north of 50 lakhs, or maybe even more in some regions. If you are buying a piece of land, maybe north of 1 crore again, you might not have that. And to do this, what do you need? If you want 50 lakhs or 1 crore, you have to take loan, you have to take EMI, right? You have to take a debt. And maybe a lot of people don't want to take loan, EMI, debt, etc. Now, REITs comes into a very similar approach. REIT is basically, you can get the advantage of investing in the real estate sector, get consistent rewards for it, like similar to your rental income, but get some kind of rewards for it as well. And you can get this at a slightly lower cost. You don't have to pay crores or lakhs or even take a EMI about it. And it is listed on the stock market. So if you look at our traditional real estate sense, it is not very liquid. What do I mean by it's not very liquid? That if I want to sell my apartment tomorrow, find a broker, sell it, pay some commission to him. It might take 3 months, 6 months, 9 months. If I have to sell a piece of land, it might take a long time. But over here, it is quite instantaneous, right? That is how fast it is. Now, let's look at some of the REITs. How is REIT structured? What are the REITs that are there? And what is the percentage that they give back to you? And you will be shocked. If you don't know about REITs, you'll be shocked. So let's look at this. Now, I have made a beautiful document alongside Debjani. So Debjani has written down all these amazing things about REITs and we're going to talk about them one by one. And I will share this entire document with you guys as well. And we will go through some examples also. Now, basically, as I said, there are a lot of people who believe that at least 10 to 25% of your portfolio should be in real estate. Now, the reason why approximately 10 to 15% should be in real estate is because it balances out your portfolio so that you're not over leveraged on one asset class. So for example, if I'm only in the stock market, then it becomes an issue, right? So you're not over leveraged about one element in the stock market. Now, if you look at REITs, basically REITs full form is basically known as Real Estate Investment Trust. Now, this is a company that owns, operates or finances income generating real estate. This is very important. income generating real estate. Now again, to give you guys an example, I'm going to go away from that document. This basically means that there is one company that buys a lot of these income generating real estate, okay, whether it is tech parks or whether it is apartments, whatever it is, they buy income generating real estate, and that all that income goes into this one company, and because you helped it, they put the money back to you as well. They give back as dividends. Okay, so this is how REITs function. Now I'll obviously go slightly more detailed as well. Now REITs are publicly traded like stocks, okay, which makes them highly liquid, unlike physical real estate things, and also they are under the SEBI regulations. Okay, it is also under SEBI regulations, and they have to be listed on exchanges and traded like securities. And like all listed shares, small investors can buy units of REITs from both primary and secondary markets. So we can start buying. The entry barrier is low. Okay, now look at this. Coming back to another point, okay, let's look at some of the REITs in the market. So there's one REIT called Embassy Office Park REIT. Now there are totally 4 listed REITs. So I'm going to show you a very beautiful, there's a very beautiful article that I want to show you guys. Let me see if I've saved. I put all the articles I'm referring to down as well. But there was one very beautiful article by Capital Mind, and you should definitely read this. I am going to post this also in the YouTube link here. Okay, so whenever you guys are free, this is a nice free article. You should definitely read it. Again, guys, the entire logic of me coming and teaching here is to make you understand what REITs are, not to tell you what to buy or sell. So this is not some thing. It's only for education. It's an introduction to REITs. Now, if you look at what is a REIT, a tax efficient vehicle that owns a portfolio of income generating real assets, okay, real estate assets. It's very similar to a mutual fund, where a mutual fund manager goes and buys different stocks. Similarly, a REIT basically goes and expands into different income generating real estate assets, but you're only leveraged on real estate. Okay, there's no large cap, mid cap, small cap, different sectors. No, you're only in one sector, which is real estate. So if the real estate market goes down or some big problem happens, then your REITs will not perform really well. Now, profits are generated in the form of dividends and capital appreciation. What do you mean by dividends? Now you'll be like, Shashank, I can just go buy an apartment. They'll pay me 30,000, 40,000 rupees rent. Why should I even invest in this? I'll pay 70 lakhs, 80 lakhs, 1 crore, buy an apartment, and I'll get around 40, 50,000 a month, which is around 4, 5 lakhs a year. That is great. So REITs also give you money back. Basically, they give it to you in the form of dividends. By the way, this is compulsory, and I'll tell you how much it is also. Let's look at the structure of REITs. Now, this is very important for you guys to understand the structure of REITs to make you realize how it works. Okay. Okay, so see this. REIT is here, which is the Real Estate Investment Trust. Now there is a sponsor. Now sponsor is usually a very big company, okay, which are also the majority shareholders of this REIT. So in Embassy's case, like for example, in Embassy's case that I was showing you, the sponsor is actually called Blackstone Group, okay, and I'll show you more about it. Now basically, and we are unit holders in yellow here, okay, beneficiaries. Now there is also a REIT manager, which is an asset management company responsible for acquisition of new properties. Then there is a project manager that takes care of all the existing real estate properties, ensures everything is working smoothly. And then there is a trustee, which is on our side, okay, trustee acts on behalf of the unit holders. Now what happens is REIT basically invests the money into properties. So they come out with a thing, we buy the REIT, we invest money with them. It's like an IPO. They take the money, they invest in properties, they expand on these properties, and they earn from rental income and price subsidy. Whatever money they get, they give it back to us as well. Now the question is, Shashank, how much do they give back? Right now, SEBI regulations require REITs to pay out 90% of distributable cash flows to unit holders. So whatever can be distributed, 90% of that should be given back to shareholders, right? The unit holders, which is me and you. Now REITs also must have at least 80% of their assets to be completed, okay, which is obviously good for us because I don't want something that's under construction and constantly under construction for years. REITs should have 80% of their assets already completed and generating income at the same time. So what happens, this advantage here is it reduces the risk for me and you, right? Now, the sponsor is obligated to hold certain number of units of REIT, and the remaining are issued to investors in the form of an IPO. Like me, if I have to buy, I can buy it in the form of an IPO. Right now, they basically, once it's listed, it forms as a permanent vehicle to raise debt and equity in the capital markets. This is how REITs structure. Okay, so hopefully you guys now have understood the structure of REITs. Structure of REITs, I hope you guys have understood. Now, if you look at Embassy as one example I'm showing you, I'll show you all the 5. Now, Embassy also came out recently, right? It came out in 2019. It was at 322, but you'll see it's now at 347. So it's only given 14% returns in almost 2 years. But if you're investing in a REIT, it is not for crazy capital appreciation, because also understand most of the revenue is coming back into your pockets, right? Most of the revenue is coming back into your pockets. Now, if you look at the financials here, 2,300 crores, 2,500 crores. EBITDA is also pretty good. If you look at the net income, it is around 698 crores here. And then the dividend payout is going to be very insane. And we look at the dividends as well, right? Go to events. Should be here. Look at the cash dividend. Right, so the cash dividend is May 6, 2021, they've given 5 rupees, and November 9th, they gave another 5.66 rupees. So they've given around 11 rupees already for an investment of 347 rupees. Now assume the same way. Now if you have to do the math, if I had to invest a massive amount of money into this, instead of buying, say, what do you call that? Instead of buying a property, right? Now if I assume that I'm going to buy a property, okay, assume I'm going to buy a 1 crore property, or even say 80 lakhs property, right? If I have to buy an 80 lakhs property, I don't know what the current rental rates are, to be honest, because each area has a different thing. Now, if I had to buy that, it would give me 23,000 shares. 80 lakhs worth of REITs would give me around 23,000 worth of shares. Now, 23,000 each share is giving me around 5.6 plus 5.66, approximately 11 rupees. That gives me around 2.5 lakhs a year. Now, if the rental income gives me more, then that makes sense. But this is 2.5 lakhs a year without any problem of, say, for example, without any problem of EMI or loan. So ideally, it is better to start off with a smaller amount. If I have 10 lakhs, 15 lakhs, and I want to keep invested in the real estate market, this is great. Now, this is coming in the form of dividends. Okay, this is coming in the form of dividends, and we will look at the taxes, everything related to it as well. Cool. Now, if you look at REITs from an example perspective, right? So basically REITs give you the exposure to real estate market without actually owning the real estate directly. So you have no problem of owning it, registration, nothing. It's like me investing in a company, as simple as that. And REITs where they can invest, or depending on the real estate, they're broken down into these different units. They're broken down into industrial and office, retail, residential, lodging resorts, healthcare, self-storage, specialty, storage units, mortgages, malls, and a mix of all of this, right? And who can buy investments, or who can buy REITs? Any one of us can actually buy REITs, to be honest, right? But I think there was in the earlier days, I'm not sure if it's still there now, but there was something known as a lot size. So if I had to buy a REIT, I had to put a minimum investment of something. Let me just check the lot size right now. I think it was there. Why is this glitching? See, this beautiful glitch is happening. Okay. Stop glitching. Okay, I can't find it. Either way, earlier there used to be a lot size. So if I had to buy this, I had to buy minimum of 8 lakhs or 9. It was not very big. Obviously, it's still cheaper than buying your own thing. But there was a lot size where you had to buy a minimum amount as well. This is really gone mad. Either way. So this is how REITs operate. Now you understood the basic idea of REITs. Okay, now let's look at what are the different types of REITs that are there and how they're basically structured as well. Because real estate can get very murky. What do I mean by murky? It can get little weird, right? Because there are so many things. Now let's look at the REITs which are there. By the way, this episode is not to tell you which REIT is better. This is only to educate you about REITs. Now, there are a few things that you should look into for a REIT, right? One is weighted average lease expiry. Why is lease expiry important? Because all these, all these REITs, right? They're into, say, office spaces or something where I'm getting income generation is happening. But tomorrow, if that guy is khali vacating and going tomorrow, then the money will start reducing. If the revenue start reducing, my distribution comes less. It's as simple as you have a house and tomorrow his lease is expiring in 3 months. So you know for a fact after 3 months, ज़्यादा पैसा नहीं आने वाला on a monthly basis, right? The next is distribution yield. So by law, REITs have to pay 90% distribution cash flows to investors by law, which is great. But this is not guaranteed. It depends on the trust performance. Again, higher is better. Then we have something known as loan to value. Now, loan to value is also very important. Loan to value basically says how much debt was borrowed compared to the asset value. So assets and then the loan. So basically we need to understand that if I am borrowing too much loan, okay, to buy more and more properties, but my assets are lower and my loan is higher, even if I sell all my assets and my reserves, everything, and I can't pay back my liabilities, which are my loan, then it obviously becomes a big issue, right? Finally comes the net distributable cash flow, which is the money that comes to me and you. Now, SPVs are owned by a holding company. SPV is nothing but a special purpose vehicle. Okay, so for all the people who don't know this, SPV is a special purpose vehicle. It's a vehicle designed for a specific reason or a specific purpose, right? And the second one is a holding company which is owned by a trust. And I'll show you one. I'll show you in this article itself. It's a beautiful article. You should definitely go read it out. And I'm going to show you that as well. All the other things are also very important. Now we come to taxation. Okay, if you look at taxation, now taxation comes very similar to what we currently have. The cash is distributed uniformly in a combination of three parameters: interest income, dividend income, and repayment of debt. Now taxation works same for all the REITs except for dividend income, right? So this is also very important. I'll come to this slightly in more detail. Unit holders are taxed at the same rate at which REITs are taxed. And REITs having the highest non-taxable portion are likely to gain highest interest from the investors like me and you. Now, how to invest you can check. If you just, I'll give you an example of how a REIT looks. If you look at Embassy right now. Now Embassy this is how the entire structure looks of Embassy. Now Embassy has a sponsor called Blackstone. Blackstone is a very big PE firm, right? And they have a trustee called Axis Trustee. And then they have this is basically our side, okay? Axis Trustee is going to work on the unit holder side, our friends, okay? Then you have the management people. Remember the people who manage the entire stuff. So this is called EOPMSL, something will be a full form of something, right? Then you have the entire REIT structure below. Now look at this. They have Sarla Infrastructure, Vikas Telecom, all of these different buildings. They have Embassy Tech Village, Express Towers. So this is basically a structure of where all the REITs are below, and they can keep adding more income generating tools here as well, or income generating assets or locations can be slowly added to this as well. So more money comes, it comes back to you. Very simple from that perspective. And how do they manage all of this, or how do they look at this? So for example, they check that Bangalore is the biggest market. So is it good? Because if something happens in Bangalore tomorrow, if there is a lockdown, then it's a big issue, right? Or maybe something will happen, also another problem. We also look at something known as top 10 clients. Top 10 tenants contribute to 40% of their rentals. So if they leave, if 2 or 3 clients leave, then it will massively affect your REIT. Then this is good. The company has a weighted average lease expiry of 7 years. So you can assume that for a long period of time, money will keep coming in. So not an issue at all. Then we need to look at growth rate. Are they expanding more? Are they taking money and investing in new assets as well? In the last 3 years, the company has grown its revenues at a CAGR of 12.1% to this much EBITDA and EBITDA grew by 14%. So EBITDA is important for us and revenue is important for us, because whatever is left out, we get the money back into our bank account. So again, and also they do a lot of what do you call that? If you look at it from a square feet perspective, square feet is very important in the real estate space, right? Because you need to know how much square feet is owned and how much units I'm getting per square feet. So all small things are very important. Now, if you look at this, the financials of this company, this is how it looks currently, right? 18, 19, 20, 21. So there has been significant growth throughout, even through COVID, there has been growth, good EBITDA growth as well. Capex is nothing but money that they're taking and investing in more income generating assets, and slowly if the capex keeps going up and more income generating assets keep coming, then more money comes back to shareholders. So you need to look at it from that perspective. Same way Raheja works with Mindspace, right? So Raheja Mindspace is there. Raheja is the manager here. Mindspace is the REIT. So lot of different things. I've shared this article with you. Go through it in detail because I can't do the whole article. It'll be too difficult to do it right now. But it has every bit of detail with respect to this. And they've given their verdict also. So I'm not going to look at that because my job is not to tell you what is good, what is bad. It's your job to figure out what is good and what is bad, right? Now, one sec. Now, if you had to invest, okay. Now, one more very famous thing that has been coming in the market, by the way, a lot of people have been talking about this because I look at all parameters, is that why invest in Indian REITs when we can do international REITs? By the way, in India, REITs is a new concept, but in international level, it was not a new concept. It's something that we already know, right? So there was a nice article on LiveMint which says, are global REITs a good option for diversification of your funds? Why should I just invest in India? Why not invest in foreign funds through different exchanges and invest in REITs of foreign companies, right? So there are some schemes that are there, which is investing in global select real estate projects. So I think there's some PGIM. So this, again, I've put all the links of this article below, but a lot of people are looking at investing in foreign REITs. So for example, there's another one here called Kotak International REIT FOF, Fund of Funds, right? Which invests in different types of funds here in the Asia Pacific REIT market. Again, what we have to do, we have to see, don't look at the returns of the REIT, look at how much dividends you're getting and compare the dividend yield to the amount of money that you have invested. Okay, that is number one. Now, second thing, if you look at REITs now after lockdown are making a very good comeback. Now, obviously, they're making a very good comeback because in lockdown, you had a very bad time. Most of them were paying half rent. Most of them didn't even have rent. A lot of people left. Now, if you look at REITs from this perspective, right? After lockdown, most of the REITs are actually coming back. And I've shared all these articles with you below. Now, from a strategic point of view, a lot of investors are investing a small amount of money into REITs every month for fixed income generation. Okay, so a small portion of money is going into REITs, and this gives you fixed income every quarter, right? Every 6 months you'll get a nice dividend, nice bonus that's coming in. And the news comes like this, right? Brookfield India REIT to distribute rupees 180 crores dividend for September quarter. Don't get excited, you're not getting 180 crores, you're getting a part of that 180 crores, and that is basically 6.43 per unit. So every unit that you have, if you have 100 units, you'll get 6.43 into 100 units basically. And this is which one? This is Brookfield. So if you go check out Brookfield, so I'll tell you one more thing to look at, by the way. Okay, this is Brookfield's REIT. They're paying around 6 rupees right now, if I'm not wrong. Let me check. Yeah, 6 rupees. Now you'll be like, okay, Shashank, all of this is great, but how to figure out what is good, what is bad? So when you're investing in a REIT, it is very similar to investing in the stock market. You need to understand what the company does, whether it's a good company or a bad company. So if you're investing in a REIT, first you need to understand REIT ke andar kya hai, what is there inside the REIT. How many assets do they have? Do they only have 3 assets that they're generating money from? Do they have 15 assets? Number one. Second plan, are they doing more assets? Are they expanding? Because if they expand, then more money comes in your pockets. So don't get happy that someone's giving 1 rupee more. Rather think who will become big in the future. My God, I love these green things going on the top. Right? So try to figure out who's giving really good returns, who's going to grow much faster in the future. So all of these things are very interesting to understand when it comes to investing in the REITs market, right? Now, if you understand these things and you understand what is happening under the REITs, then you can allocate a small amount of money into these REITs. Basically, only then you can allocate some amount of money into REITs. And again, very important, I'll share this entire document with you, which has the pros and cons. I can't go through all of this because it would become a very long episode, but I have explained the basic concept and understanding of REITs, and you will get a very good idea of how REITs work in India. And obviously do your own research and the role of REITs in a retirement portfolio. See, another very important thing, if you understood how REITs work, is capital preservation is happening, right? The stock doesn't move up and down much. So if I invest a lot of money or my emergency fund, the lot of money dividend keeps coming back into my pocket. Recently, I did a video on dividend investing strategy. So this also, you can start putting a small allocation in this, buy few units, like a SIP kind of a thing. You keep buying small units, and by the time you're done, by the time you reach your 50 or 60, you'll get nice amount of money back into your pockets, right? So that is why it's very important. Cool? Awesome. Okay, I'm just coming back. One sec. Whew. Okay, guys, sorry. Now, that was the entire episode on REITs. Now, I hope I try to make it as easy as possible to explain it to you guys, because it is slightly complicated. It is slightly confusing when you invest in REITs. But you need to understand the structure of how REITs work. It is a fixed income scheme. It is very good for passive income generation. It is very good for dividends. But again, calculate the yield also. But more important than yield, first figure out how is this going to affect you in the future, how is that going to do in the future, because the more income that comes, right, the more income that comes from REITs, that becomes beneficial for you, right? And the more they expand and the more they get income generating assets, that will be better for you as well. So this is good for people who want fixed income. This is good for people who want a regular income source. Do not expect that you will invest in REIT and the stock price will go shooting up. That is not something that might happen very easily. With respect to taxation, I'll put that document. Everything is there in that document itself. I'm going to share it with you. Go through it. Full explanation of REITs are there in that, including the taxation, because there are different types of taxation there. I've put everything inside that and I'm going to put it there. Awesome. Great, guys. So Again, this was a video that I made out of the comments that you guys mentioned, that a lot of people said I want REITs, I want REITs. So please put more comments on what do you want next. I keep doing videos on what you guys want instead of doing videos at what I want. So I would love to hear more. Again, if you guys like this video, click on the like button, share and subscribe. Again, this is me, Shashank Udupa, signing off. I hope you guys got some value today. Thank you. See you soon. Bye.